Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Henry Weingarten. Henry is the managing director at the Astrologers Fund. Welcome to Wall Street Silver, sir.
Thank you. Pleased to be here.
Yeah, it's a huge pleasure having you come on to Wall Street Silver. You sent me some incredible slides that I want to get to. First question is, what are the big four unknowns in 2024?
Okay, well, are you going to show it to the audience as
Oh,
well?
yeah. Yeah, it's shared now.
All right. Okay, the first thing to realize is no one can give the answer to these questions.
Right.
And yet all four of these in the next months to 3 months is going to totally change markets up and down. The first is the Fed. We had predicted at the beginning of the year that they would do two or three, that is to say 50 to 75 bips. So far, they've done 50, that we may be off by 25, but I think we're correct when everyone was saying it'd be 6. But the main point here is there is inflation, which we'll talk about,
Absolutely.
not the way it was. The second, and October is a key month, by the way, is Ukraine and Israeli wars, which can totally change the global situation. However, from the viewpoint of gold and silver, which is the interest of your audience, it's actually quite beneficial. The next, which is the big unknown, which is October 20th, 2nd to 24th, is to what extent gold will be involved in the BRICS. We know now that a large amount of up to 10% of country-to-country exchanges is no longer going through the US dollar. I think we're
Right.
about 54% from used to being 66%. Should they come out with, and there's been rumors of all sorts, let's say 60% gold and the rest in local currencies,
Right.
gold is going to jump tremendously. But
Do you
I
think do
tend
you
to
think
think,
they'll be successful, Henry? Sorry to cut you off.
okay, you're not cutting me off. I don't, well, it depends how you define a success. You have to remember that 2 years ago, the US and the Western powers basically stole Russian money, which is very unfortunate because it
Right.
broke international law by saying all this money that they had in both Europe and America is no longer Russia's. And what that did, they thought it would hurt Russia. Instead, it's hurting them because basically
Right.
they said we have to come up with an alternative.
Right.
So I don't think it depends how you define success. If you define success that we're going to go to 50% from, I think, 55 or 56, yes, they'll be successful. And there'll be more country to country exchanges. If you mean, will it be a substitute for the US dollar? Not in the next year or two.
Monetary Metals is offering 12% on silver, paid in silver in a historic offering, the first silver bond in over 150 years.
There's about $15 trillion worth of precious metals in the world, all sitting there. It's just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's not easy to ship, and it costs money to store in a protected manner. This platform allows gold to be put to productive use, so instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver, paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Because if you look at what's happened with the Chinese yuan, nobody wants it in the
Right.
sense because they can stop at any moment, do what the US did and say, okay, this is no longer convertible. Okay, yes, you can't have that money. So nobody wants to put a tremendous amount of money there, unless, of course, you're doing business with China and it
Right.
makes some sense to go back and forth. So I don't think there'll be a substitute, at least in the next 2 years, but I think there will be a movement and a challenge. And of course, because that's going to affect things, markets. And no one knows the way the presidential election's going. There's only one thing we can say with 100% certainty, and that is 50% of the population is going to be unhappy.
Yeah,
Can't necessarily
absolutely.
say which 50%. And unfortunately, or fortunately, depending on your viewpoint, it's a close election, like 2020, not like 2016, which, by the way, we predicted about 15 to 16 months in advance because it was a slam dunk. This is the big issue.
The elephant in the room is the debt.
Right. And that is the debt. Now, we were at a high net worth family office event a few days ago where Morgan Stanley was saying, in their view, within 10 years, this is going to be a very serious issue.
Right.
Our claim is, depending on the election in the US, it can be a very serious issue in the next 2 years, within 2 years. So this is going to come up much sooner than is being dealt with, unless certain people win the election. Okay.
Absolutely. And now, what do you see coming out of this? Like, as I know, we just talked about the four big unknowns,
Yeah.
and of course, how catastrophic that could be to the economy, or of course, we'll see what happens to the precious metals market. Now we're moving on to the elephant in the room, the $35 trillion plus in debt. And you're saying Morgan Stanley, 10 years out, they're saying it's going to
Within
be
10 years.
within 10
Within
years. Okay. And now a soft landing for the US and global economy in 2025.
total fantasy. Total fantasy. In fact, and the other thing is, of course, we do know the inflation numbers and the government numbers are subject to change.
Right.
If you realize a few months ago, there were over 1 million jobs that were created. The economy was so good because that's the theme they wanted to do. And then all of a sudden they want interest rates lowered. So all of a sudden, all those jobs disappeared.
Right.
And anyone who thinks that there's less than 2% inflation has not gone to a restaurant, doesn't eat, doesn't travel. I mean, there is some things new, as we're going to be discussing in a moment, because we are going to have elements of deflation as well as inflation. But overall, it's certainly a lot more than 2%. Look at however you're spending your life, whatever you're doing.
Oh,
Look
yeah,
at
that's
car
crazy.
insurance. Look at car insurance. Look at other things. They're going up. Look at labor costs. They're not under 2%. And that's why we're having a big strike with Boeing. And we have other things that are going on with potentially October 1st with the West Coast dock workers, and they're not going to ask for 2%. They're not going for 2%.
No.
So the point is, we do have inflation. In fact, many people would say we've been in recession for a while. I mean, it depends who you are.
Yeah, I believe since 2021, 2022, we've been in a recession.
Absolutely. But they always say the difference between a recession and a depression is who's losing their job. It's not a depression until you lose your job.
Right.
But certainly it's here. The important thing is we've been playing the theme of stagflation light. What is changing is we're going to see more recession, some deflation, and less inflation, but still inflation, more than the Fed is willing to, I could say, admit to or acknowledge.
Yeah.
Now, this is good and bad. Since your audience loves gold, the environment that we have of geopolitical tensions, especially October, and these things were discussed for us at the beginning of the year, if you look at our webinars,
right,
this benefits gold. So it's definitely going to continue. The Ukraine issue is not going to be solved this month.
No.
The Israeli issue is not going to be solved this month, and it's going to be a positive for gold.
Mm-hmm. And there's so much there's so many questions online about what will the Fed do? Will they keep moving 50 basis points? Will they slow it down to 25? How will that affect the economy? What do you think their next move is? Are they just going to, does it even matter if they go slow or fast, like what your slide said?
Well, in the beginning, we only have two more times.
Right.
One is post-election, one is in December. And we're going to talk about our December we're up to that slide that's most important. Okay. This is the most important slide. If your people don't pay attention to anything else, memorize this slide. Okay.
Why is that?
Well, we're going to talk and say why. Okay. First of all, these are our most, what they always say is most confident forecasts. Instead of saying like, blah, blah, blah before. These are high confidence. That means 90%.
Right.
On the average. Number one, there's a global slowdown recession coming 2025, 26. Now, you could argue we're in it already, but let's say it's acknowledged. If you remember about a year ago or a year and a half ago, Japan had 2 negative quarters. England had 2 negative quarters. The US had 2 negative quarters. But Japan and the UK were in recession, but somehow or other the US wasn't. I still don't quite get that.
I remember that. I remember that.
Yeah, but we were in recession. Now, the point is, they will acknowledge we're in recession.
Right.
That's the difference. We could be in it now. It doesn't matter what the truth is, but it will be common knowledge and has to be done globally. That is a global recession. That's why China did what they did in that tremendous stimulus. So number one, and at best, it's a global slowdown. And I think that's more optimistic than I give credit for. It's definitely coming next year. So what this suggests is one of the things you can do is to overweight gold, entertainment, and cash. And by cash, we mean to some extent that goes to distressed investing and it goes to special situations. There are other things we're going to be overweighting, but the most important, one of the main things is, of course, gold. But you can take this back to even when we were in the Depression, and there are other areas such as food and defense. But gold, entertainment, and cash is sort of what we're going to be pushing in 25. Next, we made forecasts at the beginning of the year, which you can look on our line, that August, the markets would be down, which they did at the very beginning. And then when it happened, we said we're also going to see it at the end of August.
And
which we did. Actually, it was September 1st, but with these forecasts can be 2-3 days off. In the old days, we could do gold to the dollar in the day. Now we're lucky if we get $10 within 2 days, but that's still, pretty good.
Yeah.
We will see by December, that is to say, post-election, another strong downtime. Depending on who wins, it can be immediately afterwards or a small rally. But once we hit December, because of the fact that there is going to be this recession coming, people will take their profits. With one set of government people, they'll be afraid of the government taking it because of higher taxes.
Yeah.
And another presidential thing, they'll want it because they're going to deal with things very seriously, and that means that profits are going to be lower. In any case, for most companies, there are always exceptions, but the general rule. So we believe November, December, there's another downtime that's strong, and one has to prepare for it, including having cash in order to buy, as we did in October 22. That was fine when the markets were way down, which we had called about 2 years in advance. As long as you had money to buy, it was fine. But if you were margined out, you're in trouble. So if you're margined out come post-election, you may be in a lot of trouble, unless you're guessing perfectly. So we're saying the markets will be down again in December because August has already happened. And be prepared for that. That's a buying opportunity, depending.
Yeah, absolutely.
Or it's a waiting opportunity, time to wait. We have to see what this, I don't think the BRICS are going to be doing that much, but it's certainly going to be affecting gold and silver.
Yeah.
But with a chance of a significant amount, we'll give numbers in a few moments. The US election, of course, we know is coming. Markets every single day now, between now and November, will go up and down.
Yeah. Just the uncertainty.
Sometimes it will be down and up. Sometimes it's up and down. What that means is two things. You either have to day trade, and by day trading, I mean hour trading, because you get your move in the next hour, or you've got to say, you know what, I'm going to wait and forget about this nonsense, and I'm buying for the next 2 years, and I'll get my 20%, and I don't care where it goes between now and then. And we'll give an example of that. So what we're recommending that's probably different than most of your audience has heard is a precious metal trade at a certain point. It's there in gold because we're between 25 and 2,700. We were recommended. I can't sell gold easily. I'm a Leo. But at 2,700, we knew it would be sold because it's a very critical point as a retest at 2,600, possibly even 25. And when silver gets to 34 to 38. Now, the last time, to give you his historical perspective, we got out at gold at 1,800, a little early, but we shorted silver at 49. Not too bad. We were off about 30 cents from the top.
Not bad.
Between 34 and 38, I would consider that. Now, what I'm suggesting, depending on who you are, and we'll talk about this in the difference, is you could either sell it, but that's not necessarily a smart move because we, for example, came into silver at 18 primarily, and 1,800 of gold. But if you sell the gold and silver, then we recommend him buy gold and silver stocks. Now, why is this so important? Because silver can drop to 24, it can drop 25%. Gold can drop 25%, and gold and silver stocks are undervalued.
Right, so they wouldn't be dropping.
So they're not going to drop as much, and they'll still be worth what they are now. And we know there's getting increasing interest. So I'm not saying to sell all of it. And by the way, this is just a percentage, depending whether you own it or not. But we're saying at 34, you might want to sell it a 38 call, but you want to consider that area. That doesn't mean we can't go to 50, but at this point, in order to protect your portfolio, you should at least have some, in addition to whatever physical gold and silver you have, you can either do it as a hedge, or you can simply buy the stocks, which are highly undervalued. As people are coming in to it. And when we go to events all the time, there are a lot of newbies, especially in the West, that are coming in. So one of the things you want to do is convert some of it into gold and silver, or if you have the money, just buy some gold and silver stocks, because they can drop 20-25% and be seriously undervalued.
Now you have a webinar coming up soon.
We have a webinar coming up, but you can look at our August 19th webinar that we have online at Henry Weingarten. We're in our beginning of the year, where you can see the forecast for August.
Nice. What I'll do is I'll put the description and your webinar in the link below so people can find you guys, connect with you guys. It's easier. You have some fantastic slides, and it's such a pleasure having you on, Henry. We have about 9-12 more slides left. I think we should do a part 2 and you come back on soon.
Absolutely.
Yeah, that would be beautiful.
Okay, so let me just then give a little closing in here to think about it. And we can give recommendations of stocks next time, obviously.
Of course.
Is to think about, are you having gold and silver because the end of the world is coming? And I don't think that, or are you running it as a business? And we're dealing with companies, for example, coming up. We want to do ones that run as business. It is likely to stay stronger. But remember, I want to give you one thought. 2 years ago, natural gas was $2. We thought above $8 it was ridiculous. Now it's hovering around $2. Those things can even happen to gold and silver. I don't think, by the way, I'm not putting that with a high probability.
Right, it could go down.
But it can go down significantly. Because, and there are some scenarios for that. I think they're highly unlikely. So all you want to do is think of it as a portfolio. Think of it, depending on whether you're using it as a hedge. Don't put everything in it.
Yeah, you're right.
It's it's probably the best place to be in the next 3 months for sure, almost definitely. But you don't want to put everything in one thing.
Right.
So
it could go down. It could go down. Yeah, absolutely.
Right. And then the problem is then people panic at the bottom. So if you're a sophisticated investor, you don't need me to say this, but if you're doing this and you're new to it, it is not only a one-way street. It's the best street to bet on right now. Absolutely. But it's not 100%. And that's why I would diversify it to some stocks as well if you're doing all physical, et cetera. And we can talk about this in some detail next time.
Yeah, absolutely. It was such a huge pleasure having you come on. This is your first time, and I know it won't be the last. We'll have you on soon for a part 2. And then, yeah, everyone watching, thank you so much. And Henry, thank you so much for coming down to Wall Street Silver.
My pleasure.
Awesome. Talk to you soon.